Well, for today's business segment, I'm joined now in the studio by France 24's Yuka Roye. Hi, Yuka.
Hi, Hexie.
The European Union and Australia this Tuesday striking a free trade deal after many years of negotiations.
Yeah, Hexie, talks started nearly a decade ago and were revived and accelerated amid uncertainty caused by Donald Trump's trade policy. The deal eliminates tariffs on critical minerals and a majority of agricultural products and allows more Australian beef and lamb to come into the EU. The two sides also announced a new defence partnership. Morgan Eyre has more.
It's a moment that was 8 years in the making. The EU and Australia signed a new free trade deal. This sweeping agreement will result in 98% of the current value of Australia's exports entering the bloc duty-free, while over 99% of tariffs on EU goods exports, including wine, fruit and vegetables, will also be removed. This will cut €1 billion a year in duties for companies.
This is a significant moment for our nation as we secure an agreement with the world's second largest economy. The Australia-European Free Trade Agreement will lower trade and investment barriers between Australia and the EU, a market of around 450 million people.
It was not smooth sailing to get to this point. Negotiations came to a halt 2 years ago over Australian demands for more red meat market access and complaints about Australian products labelled with traditionally European names such as Prosecco. The EU will now open 2 tariff rate quotas of a total of 30,600 tonnes of beef, with about 55% of the volume to enter duty-free. Meanwhile, Australian producers of Prosecco will be banned from using the name on exports 10 years after the pact takes effect. Talks got back on track in the wake of US tariffs and the uncertainty emanating from the White House. Meanwhile, Europe wants a reduced dependency on China when it comes to critical minerals.
Today, we are telling an important story to a world that is deeply changing. A world where great powers are using tariffs as a leverage and supply chains as vulnerabilities to be exploited. In our story, open, rules-based trade delivers positive sum outcomes. Trust matters more than transactions.
It's a great day.
Both sides have also agreed to a new defence partnership that will bring closer military cooperation and counter terrorism and disinformation.
Meanwhile, Yuka, rising energy prices stemming from the Middle East war are really starting to have an impact on the global economy, and that includes here in Europe.
Yeah, we're starting to see concrete figures on that. New data from S&P Global indicates that growth in the Eurozone nearly stalled in March. The Composite Purchasing Managers Index, or PMI, dropped to 50.5, just half a point above zero growth and the lowest in 10 months. Services PMI also hit a 10-month low, while manufacturing output fell to a 2-month low. Now, the cost of manufacturing, meanwhile, spiked, accelerating at the fastest pace since February of 2023. While delivery times also increased. This means that factories are having to pay higher prices for raw materials that are slower to come by.
The flash Eurozone PMI is ringing stagflation alarm bells as the war in the Middle East drives prices sharply higher while stifling growth.
Well, British manufacturers are also being hit hard by the ongoing oil crisis. The rise in cost inflation in March was the biggest since the Black Wednesday currency crisis back in 1992, according to the S&P data. Growth in factory output slowed to a crawl, weighed by a surge in energy prices and fractured supply chains. British Finance Minister Rachel Reeves told Parliament on Tuesday that the government would put in place support measures to offset rising energy costs for households and hold meetings with retailers like supermarkets and banks to discuss how they can support consumers.
Meanwhile, rising oil prices are also making one of the most ubiquitous materials in the world more expensive.
Yeah, that material, of course, is plastic, which is made, of course, from fossil fuels. Since the current supply disruptions began, the cost of plastic packaging has been skyrocketing, which in turn will make practically everything on supermarket shelves pricier. Luc Schrager and our colleagues at France Télévisions tell us more.
From bottles of water to cleaning products and fruit and vegetables, plastic is everywhere. But the raw material needed to produce packaging like this comes from petroleum, And due to the current oil shock, what was once a cheap wrapping solution is about to get more expensive.
I'm already keeping an eye on prices, so if it goes up even more, it's going to be a problem for me. I guess I'll be eating fewer raspberries.
Raspberries and maybe more besides. Shopping trolleys are full of plastic.
We don't have much choice. We're stuck with regular increases for oil right now and for other things at other times. We're kind of dependent on all these markets that we don't really have any control over.
If a punnet of strawberries costs $3.99, 20 cents of that are for the plastic packaging. But if the war in Iran continues, it could get 10 cents higher. It's the same for water bottles, which could see an extra 12 cents tacked on, pushing up the final price. This company manufactures such packaging and had the raw material delivered in January.
We're fully stocked, 18 silos at 120 tons each, just in time.
Just in time to ensure production for the next 3 or 4 months. But at this point, cost increases are inevitable.
We need to anticipate our summer orders, to be precise, at a higher price, and we're going to have to put our products' prices up in turn very quickly.
Products like these trays and pallets, which will come with higher price tags, just like any product on supermarket shelves made with plastic.
And Yuka, finally a quick check on the markets.
Well, global oil prices have come back again a day after a sharp drop amid confusion over which way the war is going. After Donald Trump suggested that negotiations to end the war were going well, attacks continued in the Middle East, with Iran denying having direct talks with the United States. International benchmark Brent crude settled at just over $104 a barrel, and the US's WTI at $92 a barrel. The price pressure has eased somewhat since then. Stocks on Wall Street swung back and forth in a volatile trading session. The Dow ended the day down 0.2%, S&P 500 shed 0.4%, and the Nasdaq dropped 0.8%. And that's it from the business desk.
Yuka Roy, thank you very much indeed. You're watching Prime News Paris here on France 24. That's the end of this news bulletin, but do stay tuned. More news coming up in just a few minutes' time.